Hello and good morning. This is Brendan Begley with McIntyre Elder Law, and this is Latte with a Lawyer. So today I want to talk about reverse mortgages. That's right, this elusive concept that you've heard so much about, maybe a tool to pay for long-term care, maybe a tool to help make sure your needs are taken care of as you age, and that's how the commercials advertise it. That's how it's portrayed in these commercials, and it reminds me of one of the pill commercials, maybe like for some type of antidepressant or whatever. All the people are so happy on the commercial, smiling and prosperous and bright colors and all of that, and then you get to the part where it has all the side effects, and you're like, wow, maybe that's not as good as it seems. But in the reverse mortgage commercials, they don't have to say all the side effects, okay? So let me go through those for you. First, let me define for you what a reverse mortgage is. So a reverse mortgage is literally exactly what it sounds. So you're taking the equity out of your house and have it paid back to you, okay, as income. So let's say you've paid off your house, you have a lot of equity in it. In fact, it's 100% equity because you no longer have a mortgage that you've given to the bank. And now you want to get that equity out without selling the property, so you reverse the process and get income from that, okay? So why wouldn't you want to do this? Well, the reason why is because you're taking the equity out of your home, and that's a very valuable asset. And let's think about this in the terms of Medicaid. You're allowed to have a home and still qualify for long-term care Medicaid, okay? And a lot of people think, okay, well, I could sell my home, I could reverse mortgage my home to pay for the high cost of long-term care. But what they don't realize is you're allowed to have a home and still qualify for Medicaid. So you're taking an exempt asset and you're turning it into cash, okay, which is a non-exempt asset for Medicaid purposes. Cash counts as an asset. And, the more educated ones of you who know a little bit about the subject might say, okay, well, I've heard that the income from a reverse mortgage coming in doesn't actually count towards the income requirement for Medicaid. And that's true. But you have to think, what happens to that income when it piles up in the bank account? That becomes an asset. So you take the equity out of your home. Let's say you take $100,000 worth of equity out of your home and turn it into $100,000 worth of cash just sitting in your bank. Let's say you spend some of it. Let's say it's $60,000 sitting in your bank. That $60,000 is going to keep you from qualifying for much needed Medicaid benefits. Okay, so that's really not a good way to go. The other thing is, and this is something that a lot of people don't know, is most reverse mortgages have a clause in there that talk about occupancy. They have an occupancy requirement, meaning that if you're out of that house for a very short period of time, an egregiously short period of time, like a couple weeks, okay? And they check on it, by the way. And if you're out of that house, okay, they can go and foreclose on that property. So that means that if you go into long-term care, they can go and take the property, okay? That's what I call predatory lending. And maybe I'm a little bit biased because of all the student loans that I have, but I think that banks, mortgage companies, these lenders, I think they're crooks anyway, okay? I'm just gonna throw that out there, probably not very politically correct, but this is blatant, okay? You have a situation where you have banks advertising to pay for people's long-term care, essentially. They're like, do this, and we'll cover the cost of your long-term care, all right? This is a way that you should be able to still pay for your long-term care. You worked hard all your life to make this home, blah, blah, blah. This is how these commercials portray this. All right, but what they don't tell you is that they can come in and take that home after you go into long-term care, even if it's a short period of time, even if you can get out of there, and hopefully you can. That's not the way to go. Reverse mortgages are not the way to go. I'm just gonna say it. It's a very rare situation that I would suggest for someone to go ahead with a reverse mortgage. So there's a bunch of options out there, okay? And that's one of the reasons why I'm not a fan of the reverse mortgage, is because you have options, all right? And that's what people like me do. They give you those options without losing the home. In fact, my whole job is to help you keep the home, help you preserve the value of your assets and still get your long-term care paid for, so that you can have that paid for. You don't have a bunch of debt. They don't come in and take your assets, and you can leave something behind for your spouse and loved ones. So if you're thinking about a reverse mortgage, probably should think otherwise, but at least come talk to me. I can help you out. I can talk you through it and see if there's other options out there for you. So if you have any questions about anything that we do, which is estate planning and elder law, give me a call, 704-259-7040.